Welcome all to the Node. I am Mike, aka Veteran Crypto, and here at the Node, we bring you Monday through Friday, 9 a.m. to 11 a.m. Pacific Standard Time. We bring you news, interviews, and education, investing education. So be sure to follow us, like us, and share out the stream. If you could help us grow the channel, we'd greatly appreciate it. So I'm going to go ahead and jump on into it while we're waiting on David. So what we got here is our YouTube channel that we just stood up yesterday. And if you are interested, you can follow us there. This is starting Monday, going to be the only place that we're streaming on YouTube. We're not going to be streaming on DeFi, crypto, and airdrops anymore. So please go on over here and follow us here. Also, if you would like to find links to our other offerings, our official website, thenode.pro, our official Discord is in, the link is here as well. And then our official X account. And then also DeFi University is where David has built out an entirely free course from entry level all the way up to advanced DeFi strategies. And it's 100% free. There's no catches, there's no hitches. You have no excuse to not understand crypto, cold and hot wallets, DeFi protocols, just blockchain technology in general. No excuse to not know this stuff. Have a whole website built out with quizzes, everything that you need to understand this emerging technology.
Absolutely.
So we got the YouTube channel. Here is the X account. You can see that we're live right now, and it's at the Node channel. We have DeFi University. This is what I was just talking about. You can come up here to the top right-hand corner to the course hub, and it brings you right. This is as professional as it gets. It takes you step by step through all of it. Gives you quizzes. You can earn points. He's going to be tokenizing this, and you can actually earn a token. It's basically you're getting not paid to learn, but depending on what the token ends up being worth, you're kind of getting paid to learn. So
kind of cool. Yeah.
Oh, very cool. And so here's our official website, thenode.pro. And David, do you want to walk them through what you're building here?
Yeah. So Mike, now that we've got the YouTube channel all set up, because X's API is kind of a pain in the ass, man. So like now that the YouTube channel is set up, what we can do is we can stream the feed direct. In fact, I could probably get it done like right now as we're talking during today's session, dude. But I can stream the feed from YouTube right into that center panel in the Node. So you'll have the live stream there. And then whenever the streams are not running, I'm thinking it'll probably be best to like pull a feed from Kick, because Kick has like a really good looking like upcoming like thing where it shows you, hey, these are the upcoming live calls.
The schedule.
Yeah, a schedule, because since it's streaming to all of these different platforms, it doesn't mean that we need to only show the live stream from YouTube. We can show the live stream from YouTube, and then like after the live stream's done, then we could use the replays from Kick right there in that center. And then on that right-hand terminal right there, I'm thinking that wrapping the APIs from a handful of crypto and DeFi channels. And I found this GitHub repo last night, dude. Now that I've been like basically like developing software for a living for the last like year, so like there are these GitHub repos that give you all of the different free APIs for anything you can imagine. So all of these crypto and DeFi free APIs, I'm thinking wrap them up into that terminal, and then people can chat with these APIs in the terminal. That would be pretty darn cool, because getting a unified
for research.
Yeah, that's for sure. Really, really good for research. And then that left-hand panel right there, Mike, the way that that's going to work is I built an admin panel that looks very, very similar to this front end that you're looking at. Mm-hmm. And so any one of us on the team will be able to hop into that admin panel and number one, manage the chat, so that if anyone becomes, too rowdy in the chat, they could get muted for a little bit or something. And then on the left-hand panel, you'll be able to put in there just the links and it's going
Yeah,
to pull the
through
metadata.
all the different news that we talk about, so that people can dive deeper, because we don't have time to go in depth on every single one of them. But I definitely want to encourage people and assist people into diving deeper on the ones that they find interesting. So
Yep. And you know what? I don't know if I can really do this as we're talking today, but I do have a couple of hours time today where I'd like to at least, Mike, hop on a call with you and
okay.
then go through and I just want to get the website all dialed in today.
Oh, absolutely, dude. I'd be all
Yeah.
for that. It's
Awesome.
I'll make time for that. But
Sweet.
yeah, and then of course the newsletter, the automated newsletter. I mean, that thing is freaking sexy. So actually, I'm going to show that real quick. So this is still in development, but this is DeFi Don did the back end on this to make it work. I did the the UI, the user interface, and the kind of customer facing aspect of it. But this is going to be sexy because you can actually customize your newsletter to the assets that you're invested in. So I put in Bitcoin, Ethereum, Sol, Arrow, Canton, Coinbase, gold, and silver, and then it automatically puts the S&P 500, Nasdaq, and the Dixie in, and then you can generate a newsletter, and it will generate news and trading ranges. It will give you support and resistance levels so that you can enter into DeFi pools if you want for those assets. And all of this is going to be for the assets that you want. So it's not going to be like our old newsletter where it's whatever I decided to give you. If you want to, enter a liquidity pool for XRP, you don't have to get my approval for that. You can do whatever you want. So this is going to be really cool, but this is going to be integrated into the site as well. So I'm super excited about this.
Yeah, that is really, really cool stuff. And so the way that I see that working, Mike, is we could actually turn that into an actual email newsletter where people could, when they sign up, they
Yeah.
could select, hey, I really would like to in my newsletter receive, information each morning about Bitcoin, ETH, Sol, and maybe a handful of alts that I'm interested in. Or maybe they don't want to get information about Bitcoin, ETH, and Sol. Maybe they
Yeah.
only want some info about, the handful of alts that they like or whatever.
Maybe at one point we make it to where, like, down the road, we make it to where the AI, they can talk to the AI or chat with the AI and say, hey, this is how I want my newsletter delivered. I want it to my email. I want it texted to me in a hyperlink, whatever. And they can choose how they receive it.
That is pretty cool, man. I can't think of a single newsletter that's like that, It's
That would
basically
be
an
sexy as
AI
shit.
newsletter. Yeah.
Or
Yeah.
even
And
or even have it where it's like, hey, read my newsletter to me while I'm driving.
yeah,
You know,
that would be pretty cool too. Yeah.
that would
Like
be,
a
and you can
podcast.
pick the voice. You could have like a sexy Australian female voice or something like that.
That's a great idea, dude. I really like that. I really
Yeah,
like that. And that
that'd be
wouldn't be all
cool.
that hard to build out either.
Yeah.
Um, so I like that, man. That's awesome. We got to talk more about that in Slack later today.
We're coming up. I'm loving this team. I mean, just the skill sets that everybody has is taking everything. It's only been a couple of days, and like we're already like blowing up. I mean, like we're up over 300%. I was looking at the analytics this morning, and
Mm,
as far as like views on our posts and stuff, we're up over like 300%. And, well, a lot of channels I'm watching their subscribers shrink, but let's
I know, especially during the bear market, man,
yeah,
Yeah.
yeah. All right. Well, let's get into the news. So I'm going to get into the habit of doing this. Just there's not a whole lot going on, not like explosive growth or anything like that. But this is DeFi Llama. I just want to ensure that everyone that watches our channel knows where we get a lot of our data and a lot of our information. And you want to go to multiple sources just to trust but verify. But currently, we're looking at, in the past 24 hours, there has been about a 3.5% pullback on the amount of TVL in DeFi. Just want to be fully transparent on that. Stable coins, 7-day growth. We still see stable coin inflows coming in, and so that's good for that. Let's actually move on to RWA.XYZ. As always, we're seeing growth. Just all the tokenization of real world assets, stocks, bonds, commodities, private credit, all of those things. You're just you're seeing that up and to the right. Doesn't matter if it's the bear market. Everybody's building. Everybody's bringing, institutions, banks, governments. They're bringing everything on chain. You cannot argue that fact. It's happening. The retarded fish frog baby of TradFi and DeFi is happening. It's being conceived right now. And it's going to be seamless. Most people that don't know about crypto, that still think crypto's a scam, and all of those narratives and a pet rock because they listen to Jamie Dimon, they in the future are going to be using this technology, and half the time they're not even going to be aware of it.
And they call
It
it the
is going
mullet.
to be seamless. What's that?
Yeah,
David?
it's called the mullet. Yeah,
Yeah.
it's with TradFi in the front, DeFi in the back. The
Yep.
funny thing about Jamie Dimon is, like, basically every time he talks shit about Bitcoin or crypto,
It goes
it
up.
it means that he's buying.
Yeah.
That's what it means. Yeah.
Usually, yes.
Yeah.
All right. Well, let's pop over. I'm going to blast through some of these headlines. We got about 45 minutes in the news section of our show. So let's start going through these. So, first out the gate, we got U.S. crypto legislation stalls in the Senate. There's a Clarity Act deadlock. A landmark crypto bill, the Clarity Act, aimed at clarifying federal oversight of digital assets, is stalled in the Senate due to disagreements over stablecoin yields and bank provisions. Lawmakers are negotiating compromises while agencies like the CFTC signal a possible interim frameworks. So it looks like because of the deadlock, the CFTC is looking for ways to put into place some not legislation because it wouldn't be permanent, but at least some guide rails or some rules to allow things to move forward with this technology and the integration into TradFi, in lieu of actual legislation and law. So I'm actually going to bring up this here.
Mike, the funny thing about that is, Bitcoin and DeFi doesn't need regulatory clarity to continue growing, like, at all.
No.
It's just,
Well,
for the institutions to be able to adopt this stuff, they need the regulatory clarity. But for individuals,
yes,
the people for whom Bitcoin and DeFi is supposed to basically, like, financially emancipate, we don't need that. In fact, if we get that, it's going to make crypto and DeFi and Bitcoin much more regulated in the United States for individual retail investors. But it'll bring on all the institutional money. So, a little bit of a trade-off here. Look, at the end of the day, I'm for regulatory clarity, but I'm also a libertarian. So, like, I don't exactly like that. So
I want to have both. I want to have protocols and platforms that are not regulated, that we the people can use, and we can freely move money and liquidity and lend to each other and all those different things. But I definitely see for that institutional money, the government, the big money, and this technology to move forward. We really need that legislation, and I think there's a place for both. It's just a matter of one, governments, because of course, they want to have control. They want to have, be able to, make sure everybody, pays their taxes and all that stuff. We actually have some news on that here in a minute. And then they want to be able to, ensure compliance. So, they want to be able to freeze assets if there's, like say Iran, if they find that they have digital assets on Binance or Coinbase or something like that, they want to be able to freeze that and potentially seize that. I agree with it or not. That's that's what they want. And so there's gonna that aspect is gonna happen, but I think that there is going to be a place for these truly decentralized protocols to exist. And it's just a matter of how governments treat those, I guess.
they're gonna live on Bitcoin, bro. They're gonna live
Yeah,
on Bitcoin because you can't censor a private key.
exactly.
Yeah.
So here's some key numbers. As of right now, it looks like it passed July 17th in the House, 294 to 134. The deadline is spring, and the let's see, co-sponsors. There's 21. Looks like a 70% chance of passing. Polymarket odds. Fair shake war chest. Yeah, it looks like, and this is what Trump was blasting out on Truth Social and on socials after he met with Brian Armstrong. But we talked about this quite a bit over the past couple of days, so let's go ahead and move on.
This is really important, this Clarity Act.
It is.
So the market structure, the Clarity Act, um, you know, as long as we're able to get this at midterm elections, I think that would, it could, mark maybe a trough in the Bitcoin bear market.
Mhm.
So I'm hopeful that we'll get that before November, because if the Dems win the Congress in November, then yeah, I don't think that we'll get any crypto legislation passed
Well,
at all.
that's what's holding up this Clarity Act is a lot of the Democrats, like Elizabeth Warren, who's basically the mouthpiece for banks.
You mean
She was,
Pocahontas?
yeah, yeah,
Yeah,
the one that was claiming she was Native American to get a job at
right.
Harvard. Yeah.
No, it was so that she could get into school. She said that she was Native American to get into school at
Well,
Harvard.
no, she wanted to get. She wanted to be basically a DEI hire at Harvard.
Oh,
So she wanted to get a job there, and so she was claiming that she was Native American.
it's just lying, bro. Like
Yeah.
just deceitful,
Well, and then
deceitful
she tried to take
nature.
a DNA test, and she was like 0.01%. It's something like minuscule, and she was trying to say, "See, I'm."
Yeah, sure.
All right,
I
all right.
know.
So Bitcoin has been bouncing around, just below and just above 70,000. That kind of psychological level. Mixed sentiment. Bulls and bears are fighting it out. Traders await the U.S. CPI data, so we're just waiting to hear what's going on with that. Um, After that, we got Mastercard launches major crypto partner program. Mastercard rolls out a crypto partner program with 85 or over 85 partners, including Binance, PayPal, Ripple, Canton Network, and many others. So I'm actually going to share this real quick.
That's actually kind of interesting. So, what exactly does a crypto payment program partnership look like from the company whose business model is most likely to be massively disrupted by crypto? How exactly does MasterCard partner with the companies that are going to disrupt its very like business model?
That that's
How does
I
that
think that's
work?
why they're
Yeah.
partnering with them, is so that they have their finger in their hand in the cookie jar. They can still charge those fees, because if they're facilitating the movement of liquidity, they can take their little piece of it every time something moves. So I think most of these institutions realize that they have to figure out how to maintain their bottom line, their profit margins, because this technology is being adopted. And if they don't figure out a way to stay profitable, then
Yeah.
they're going to become, irrelevant.
Well, I mean, but that's what stable coins and crypto like are poised to do,
Yeah.
is basically like eliminate Visa and MasterCard, eliminate those payment processors because you don't need them any longer. And so I'm just reading here over on Gemini. It says, so the MasterCard crypto partner program, rather than just issuing a few co-branded debit cards, MasterCard is attempting to bridge the gap between traditional finance and blockchain technology on a global scale. And I find that to be a hilarious statement, because MasterCard can't bridge the gap. Like, MasterCard will be replaced by stablecoin payments. So,
Well,
yeah,
yes and no, because I mean the credit aspect, the people spending money basically that they don't have. I think that is still going to be in play for these companies like Mastercard and stuff like that. But yes, the movement of liquidity, like cross borders and all that stuff. You're absolutely right. with stable coins and in vehicles like that. I mean, you could be in freaking anywhere in the world and be like, "Hey, Mike, you mind sending me $100? I forgot my wallet." Or I mean, I know it's a stupid example because with crypto, but I forgot my wallet. Can you send me $100? Then I can just go on my phone, a couple of clicks, and boom. I didn't need a bank. I didn't need MasterCard. I didn't need anybody. I just sent you $100.
Yeah, I mean, so I'm just reading through this, and what they're saying is that MasterCard is shifting from parallel to practical execution. So from parallel execution to practical execution. And
Buzz, 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 buzz,
I'm
buzz.
still like,
Buzzwords,
I'm still
buzzwords.
stuck. I'm still stuck. Like, I don't understand because, like, like stable coins are a replacement for those old MasterCard Visa rails. And MasterCard's saying that they want to take the best parts of on chain technology and seamlessly integrate them into the established global card rails that people and merchants use already every day. But what MasterCard seems to be missing is that stablecoins and fast cheap chains like base are a replacement, an upgrade for those rails. It's just so funny, man. It's so funny because the primary use cases are cross-border remittances, B2B money transfers, global payouts, settlements, and just buying a coffee at a Starbucks, like anything. And
Yeah,
so those use cases basically eliminate the need for Visa and MasterCard. So it's really interesting to see. Like, I still don't quite understand how they plan to like integrate this stuff in without just cannibalizing their own businesses. It'll be really interesting to see, that's for sure.
I tend to agree. I think a lot of these companies are scrambling to find their place in what's becoming the new financial system.
Yeah,
I really think that they're this and that could be a reason why a lot of this legislation is getting slowed down. They're trying to pump the brakes on it. They're using their the lobbyists and their influence to slow these things down so they can position themselves properly for what's coming. I
exactly.
mean,
Yeah.
and like you mentioned, in November we got the midterm elections. We got this Clarity Act that they're trying to pass. There's a lot of things going on that is gonna decide how a lot of this moves forward. So there's a chess game going on right now, and we're all kind of along for the ride for the most part, because I personally believe that we the people aren't freaking don't have much of a voice in our government anymore. And a good indication of that is a bunch of people in our Discord this morning were posting. I guess Washington State just imposed its first ever income tax for anybody that makes over $1 million a year, but it's like a 10% income tax. And
So that's
so,
basically one of those like let's seize your money type taxes.
yeah, pretty
Yeah,
much.
yeah.
And I'll actually let me bring up. So Jeff, he posted it this morning. So already, like today, they passed it, and the Starbucks founder, full on
Is
leftist.
leaving. Yeah.
I'm sure that he voted, blue, Democrat down
Yeah, but
ballot.
he's probably not a communist though. And I think that like a lot of people get hung up on that word. They're like, "Oh, communism, we don't have that here." And it's like, "Well, yeah, these people are communists. They're
Well,
communists."
they're open about it.
Yeah,
Freaking Mondani in New York, the new mayor.
right.
He's proud of it. He goes
Yeah,
around and like him and AOC are like bosom buddies, and doing photo ops and talking about all the communist stuff that they want to do. Like with
right.
housing there and grocery stores and all that stuff. So
They don't
it,
believe in private property, and they believe in seizing the wealth of anyone who's even remotely productive.
yeah.
It's just the exact antithesis of what America stands for is what these laws that are being enacted, I guess, in Washington. It is the antithesis of being an American. It's just,
Oh,
oh
absolutely.
man, yeah.
Well, and so yeah, Howard Schultz announced that he's retiring to Florida
Oh,
uh,
great.
on the same day Washington passes the millionaires tax. Surprise, surprise. You
Right.
know, and it happened in California. Is everybody voted in the people into office that are effectively destroying these highly profitable Washington State. Those that don't know, Microsoft, PayPal, all these tech giants. Um, they all are based over in by Seattle, California, Silicon Valley. I mean, just the economy in California was just massive. It was more than most countries. I want to say it had like the third largest economy or the fifth largest economy in the world as a state.
Yeah. Yeah.
And look at it
Yeah.
now. It's running a massive deficit. It's massively in debt. And everybody that pays and that builds and that does anything in that state has moved to Texas, Utah, and Florida.
Yep.
Three
Yep.
red states.
Because it's basically illegal to own a business in California. Like, the
Yeah,
taxes are so punitive, the regulations are so punitive. Um, yeah, it's really a shame because it's a beautiful state. It's just the people fucking
it
suck.
really is. It really is.
Yeah.
All right, next up in the chute, institutional accumulation and market structure signals. Bitcoin reclaims 70,000. Ethereum sees pressure from ETF outflows and negative funding rates, signaling cautious positioning. Do you have anything to add to that, and maybe share with the viewers?
So one more time, Mike. Let me see if I can look it up, get a little bit more context.
All right. So it says institutional accumulation of Bitcoin and Ethereum and market structure signals. Bitcoin reclaims 70,000. Ethereum sees pressure from ETF outflows and negative funding rates, signaling cautious positioning.
Gotcha. Okay, so let's start by checking in with the ETFs because that's really where we need to be if we're going to talk about, some type of accumulation. Although I got to say, I don't see that. I don't see that happening.
That's
Um,
that's why I'm asking you. You're our subject
yeah,
matter expert on this stuff.
not yet, not yet. And so I know that this is really
Can you zoom
hard to
in a little
see.
bit,
I'm
please?
I'm going to zoom in as
Oh,
much
thank you
as I
so
possibly can. So this is about as zoomed in as I can get it. Now this is farside.co.uk. These guys, Farside Investors, they track the Bitcoin, ETH, and Sol ETFs, the flows into and out of these ETFs. And so, over the last couple of days here, I mean, look, it's up and down, but over the last, since January 10th of 2024, flows into those Bitcoin ETF products have been just straight up. So, flows net have been extremely positive. But is this what we're seeing now a sign of accumulation? I don't think so.
Okay.
So this here looks to me like a flag. This looks like a bear flag.
Mhm.
And what we've got going on is we are smack dab in like maybe the third or fourth inning of the Bitcoin bear. I think that's where we are now. And the important level to watch is really this 200-week moving average. So if they're talking about institutional investors accumulating Bitcoin and ETH, I don't see it in the ETF data. If we bring it back on over here to that ETF, the ETF flows, let's take a look at the ETH ETFs and let's just see what's going on with those. I see outflows. So this isn't exactly, when I think of accumulation, I think of this for ETH. So back in March of 2025, the April lows,
Mhm.
this dip right here, this is when Tom Lee really started accumulating a position in ETH down here at 1350 or so. So this was when he really started to buy, and those flows for the rest of the summer into those Ethereum ETFs were basically nothing but extremely positive flows. And so we're not seeing that, not now. Look, it's a Bitcoin bear, and so that means that altcoins should also face a lot of pressure. And it's nice to get a bounce on the weekly out of ETH here. And in
Mhm.
fact, I think that for the rest of the month of March, we probably get more upside out of Bitcoin, and that drags up all the rest of the altcoin space. So, think Ethereum, Solana, et cetera, et cetera. So my expectation here is that Bitcoin actually continues to rally a little bit, maybe up back towards 74K. But as far as the headline goes, Mike, with accumulation or institutional accumulation, I just I think that these narratives are just that, a narrative. And the
The data,
only
basically, the data doesn't support it.
I think that price is what matters.
Mhm.
And when I look at price, there are patterns that play out for Bitcoin that have played out, since Bitcoin's inception. And whatever the reason is, I don't know exactly why. But yeah, so I'm Bob Ross, huh?
You got to be like happy charts. We're just going to put a
Yeah.
green candle over here.
So
Just a
there's a
green
resistance,
candle.
the resistance at 80, but it's okay. The support at 58,
That's
something
right.
like that.
We
Something
call
like
you the
that.
Bob Ross of crypto.
I know,
All right.
right? So this is what I see here. I see the 200-week moving average, the important level of support below. In previous Bitcoin bear markets, we've seen Bitcoin in March of the midterm year have a nice bounce, which ends up being simply a lower high. So here's that all-time high. Here's a lower high. And it looks like we could be shaping up for a third lower high during a Bitcoin bear, which means that if we get a lower high somewhere around like 80K or something like that, well, then that's a great opportunity to sell Bitcoin into that rally and get short, thinking that it would retest this 200-week moving average. That is my expectation for BTC over the next 6 months.
Perfect. All right. Let's talk about the macro backdrop. So, CPI and geopolitical tension influencing markets. Global macro conditions, including oil markets and Middle East tensions, continue to influence risk assets, including crypto. So, what are you seeing? As far as the those macro influences,
Yeah,
affecting the markets right now.
the important thing is crude oil. And so we've got to go ahead and zoom into a daily. The real important thing is what's going on in the Middle East, and is that going to push the price of crude higher? And the big deal about this is, hey, energy is an input cost in just about everything, if not everything. And so if one of the most important input costs has doubled, or has increased by 50% or more over a very, very short period of time, that should eventually feed through into inflation data. Now, what I want to go ahead and move over here to is, what even is CPI? Like, because I think that many people think of inflation, they think of CPI, they say, oh, well, the Fed is telling me that CPI, that inflation is coming down, and that inflation is like getting close to its target. And its target is like some random arbitrary number. Like, did you hear Fed Chair Powell? He was asked at one of his press conferences over the last year or so, where they made a rate decision. He was asked, so why is it that 2% is the inflation target? And his answer was, well, that's what they all do. Everyone's 2% for all the banks. Don't you worry, it's 2%. It was a bunch of bullshit. Like, he
Yeah,
didn't actually give an answer because there is no answer to give. It's completely arbitrary, it's made up. And
yeah.
so this CPI, it's a, and this has changed. The way that this is measured has changed a lot over the last, since 1980. So
They
this,
well, they each administration they tweak the numbers to be as positive as possible to make it look to basically put lipstick on a pig.
right. And so we've got to know a little bit about how it's calculated. So the Bureau of Labor Statistics, which up until recently was run by some type of Karen, creates a virtual basket of goods and services that represents what a typical consumer buys. But here's the thing: the data exists now such that they don't have to create a basket. They could literally get like vector stored data for every single thing that an individual could ever buy, And
Mm.
they could calculate a real inflation rate if they wanted to.
They
Like
don't want to though,
they don't want to. That's the point. And
because then
you
they
know,
don't control the narrative.
right, exactly. And so, here we've got these categories, right? You've got housing, rent. And so this is weird too. Equivalent rent for homeowners is like kind of how they like figure out inflation for housing. You've got
Mhm.
food and beverage, you got transportation, medical care, education, recreation. So it misses a lot of stuff. The important thing to think about here with CPI is that this measures the rate of inflation, and it's a made up government number. So this
Yes.
measures the rate, okay? This doesn't measure the absolute price inflation. So during the Biden regime from 2020 to 2024, when we had that insane runaway inflation as a result of Fed Chair Powell printing $4 trillion in 18 months, the expansion in the money supply created that price inflation. So
Mhm.
the price inflation did not go away. All that changed was the rate of that inflation went down.
Mhm.
So prices inflated and have remained inflated because the value of the currency that we use to buy goods and services went straight down.
Mhm.
So when you expand the money supply, that's the denominator. Okay. So if the denominator gets expanded, gets inflated, then the price that you pay for everything goes up. Not because those goods and services became suddenly much more valuable, but
Mhm.
because the thing that you're using to buy them became less valuable.
Yes.
So this CPI number is simply the government's fake reading on the rate of that inflation, not has that inflation come down, because the money has become so broken that that price inflation is never going away. Mike, I saw some guy the other day on YouTube, going through a Costco and showing what he had paid in 2020,
Yeah.
literally pictures of the same exact items in 2020. And dude, it's been like 100% price inflation for
Yeah.
most items.
I I can 100% verify that. I mean, I'm a creature of habit. Usually when I go to the store, I buy the same things every time, and my grocery bill per week for a single guy used to be around $100, maybe a little bit over 100 if I bought something like a bottle of whiskey or something like that, out of the ordinary. But for the most part, it was around $100. Now it's like 180, $200 for the same shit.
Yeah.
Nothing changed. And a lot of the stuff I noticed, like potato chips, for example, there's a lot less chips in the bags. The bags are the same size, but there's less product inside the bag. So
Well, you're buying some air. It's some really good tasting air.
it better be. It better be. It's like I need to
Yeah.
like poke a hole in it and like huff the air to get my money's worth or something.
Oh my goodness. You see what Ellie's saying in the chat? Price $2 for a bell pepper. Like,
Yeah.
yeah, man. Wow. Wow.
Well, and they're about to churn. Like I actually had to throw one of mine away. I the first 2 days after I went grocery shopping, it was a 3 pack. I used one, I used the other, and then by the time I got to the third one on the third day, it was already churning, and so I had to throw it away.
Yeah, Mike, this is like foundational stuff that we were talking a lot about in the DeFi high school content. Just
Yeah.
really learning about money and how money works and what
Mhm.
money even is and why inflation is such a pernicious tax. Um, you know, Dude, like we live with this every single day, and most people don't understand it at all.
Yeah.
So and Bitcoin fixes this, and so does crypto,
Yeah.
but not if it's regulated to death. So
Mm.
I hope that that Clarity Act passes, but that it's a positive piece of legislation.
All right. So, yeah, in crypto news, I mean, we already talked about the legislation, but it's again, it's basically over disagreements over stablecoin yields and bank involvement. Bitcoin and Ethereum price action. We talked about that. Looks like Ripple is expanding globally, including plans to obtain an Australian financial services
Oh,
license.
great.
It's and I can't stress it enough. And I'm going to keep saying it. Do not confuse XRP the token with Ripple the company. It is not the same thing. Just because Ripple is growing and expanding and getting all these opportunities, it does not mean it could just, from the narrative and from, people FOMOing into it, it can affect the price. But what's the word I'm looking for? Not tokenomics, but I mean, it is tokenomics, but it's not the best word, but structurally, there is no correlation between Ripple, the company, and XRP, the token. It used to be where they were trying to onboard all of these banks and institutions onto the XRP ledger. That and XRP was the only token on the XRP ledger that XRP was going to be used to move value and for gas. A very cheap gas, by the way. Each transaction 0.00001 XRP per transaction. That changed with RLUSD. Ripple has shifted. You can do your own research, look at the news, look up everything that they're doing. They are no longer 100% trying to push in that direction of onboarding everybody to the XRP ledger. They are trying to become a global bank. They are dumping XRP tokens, that they that unlock out of the monthly escrow, 1 billion tokens per month. They've been selling that and buying up companies that already have a lot of these banking licenses so that they can spread because they want to become a bank. So basically, when you're buying XRP, you are funding with no guarantee because it's not a security, it's not a stock. There's no guarantee that you are going to profit from the success of Ripple. You need to understand that fundamental fact. Does it mean that XRP is a bad investment? Time will be the judge.
So
But
Mike, check this out. You see what
what's
it
that?
says here over on Gemini? It says that while Ripple spent over $2.5 billion on acquisitions in 2025, including the prime broker Hidden Road and the Sydney-based Solvexia, the CEO, Brad Garlinghouse, has indicated that the company plans to, quote, slow down the acquisition binge for the remainder of 2026 to focus on integrating these new assets. The reason why he's got to slow down the acquisition binge is because he can't dump his XRP token on retail for the same high price that he was able to get in 2025. So, like, that's the reason, man. I don't see what their actual product is. It looks like
They're becoming
Ripple,
a bank.
it looks like they're becoming like the CBDC rails. They're completely closed source. It's closed.
Yeah.
It's not open. So, they're trying to just be like the central bank digital currency rails. And so it makes a lot of sense for them to aggressively expand into Australia because Australia is like a, communist Muslim country now. So like, yeah, it makes a lot of sense for them to want to do that.
Well, it's called APAC.
Right.
APAC is what Australia is a part of.
Yeah. Yeah. So they're talking about managing the entire life cycle of a transaction within Australia. Man, that just sounds great, doesn't it, Mike? You can move to Australia,
Yeah, if
and
you
then,
own Ripple stock,
oh no, it's great, man. So you can move to Australia, and when you get there, they'll lock you down and they'll force you to get injections, and there's no freedom of speech. And then when you go to the bank, it's a Ripple Labs bank where the entire life cycle of all of your transactions is meticulously monitored so that they can extract as much value from you as possible. It sounds like an authoritarian central bank digital currency, and it looks like that's what Ripple Labs is trying to build and then sell to jurisdictions that are all about that type of stuff, like Europe and Australia. I don't think it would ever catch on here in the United States unless we get another Democrat administration. Then it would probably catch on in a heartbeat.
yeah.
But yeah, man, no, this is XRP Ripple, it's some type of scam. I can't quite tell exactly what, but it doesn't pass the smell test. Like
Mm,
these guys have been like a zombie company for a long time, and now
absolutely.
they're starting to buy stuff, and yeah, it just
Well,
not a fan.
we got about 15 minutes left in our news portion, so let's jump into a little bit of what I was able to find this morning when I was poking around X. So it looks like Aave, the largest borrowing and lending DeFi platform, experienced an Oracle malfunction that led to 26 million in unfair liquidations of
Oh, I
wrapped
saw
state
that.
ETH.
It's horrible.
Chaos Labs explained in a post-mortem that it was caused by an inconsistency in snapshot ratio timestamp for Capo, stemming from an off-chain oversight. I mean, are you able to give us a little bit of insight into this? Because I know you
Well,
use
so
Aave quite a bit.
yeah, I've got a lot of cash sitting on Aave, and the thing is, the I guess the founder of Ripple, or not fuck Ripple,
You
the
got Ripple on
founder
the
of
brain
I
now.
do the founder of Aave, Stani, I think, he lost the majority of his engineering team over that disagreement, around the Aave token and
Yes,
governance.
yes.
So he lost like all of his engineering team. They didn't like the V4, and
Mm.
he wants to push the V4. They didn't like it, and then boom, $23 million in improper liquidations. I mean, dude, that can be catastrophic for those investors who had Lido wrap staked ETH supplied as collateral over on Aave. Um, I wonder, is there any information about some type? Are they reimbursing their customers there who were affected by this?
I haven't seen any news, that they are or are not going to do that. I mean, if you want to look something up while I talk about the next
Yeah. So is Aave Labs reimbursing customers for the improper liquidations of wrap staked ETH earlier this week? So that would be really interesting to know. Kind of like when Binance caused the October 10th crash, they sent back a couple $100 million to people
yeah,
after stealing like billions.
billions, yeah,
Yeah,
yeah.
I know, right? So it says they call it the Capo glitch. Wow, what a name! Connected Asset Price Oracle. And yes, so Aave is saying that all affected customers will be fully reimbursed. Good, good,
Okay.
good. That's a
No,
good thing.
that's very bullish for Aave. The fact that they're taking full responsibility, and that's the kind of thing that you want to pay attention to. When you're investing in these DeFi protocols, no, not investing, but when you're putting liquidity on these DeFi protocols, and if you're investing by buying the token, well, I use that term loosely, but that's the kind of thing that you want to see. That's the kind of thing that builds confidence to where people are going to feel comfortable with putting their liquidity on the platform. So, yeah, you stand by for more on that. So it looks like Chainlink, major perps DEX with billions in daily trading volume, EdgeX exchange, has adopted Chainlink as its canonical cross-chain infrastructure, with Edge becoming a CCT. Chainlink CCIP now powers transfers to the Edge ecosystem, including every asset bridge for spot listings. So, again, very bullish for Chainlink, but understand with all of these assets, I'm going to keep drilling this in. There is a difference between the token price go up and the success of the underlying company. And it all depends on the tokenomics. Is there a mechanism in place where the project shares its revenue or fees with token holders in some way? And I don't believe that Chainlink does. I believe that there's some staking where you can earn a little bit, a couple of percentage points with Chainlink, but other than that, there isn't a mechanism in place where those fees, any fees that are generated or any revenue that's generated by these people, because Chainlink's getting adopted by fucking everything.
Yeah,
And
yeah.
I hold Chainlink, and I've never gotten a dividend check, or
Oh,
I've never
right.
got any free Chainlink for holding it. So you need to understand these things.
So
You know,
so so Mike, let's check out the DEX, that perps DEX,
okay,
EdgeX. So you see right here on the thing I'm sharing, we've got there it is. That's DeFi Llama. So the perps DEX that they were talking about, EdgeX. I always, whenever I'm learning about some new protocol, I always hop over here to DeFi Llama, type in the name of the protocol, and then I take a look not just at TVL, but I want to take a look at their income statement. I want to see, do these guys make money? And turns out a lot of these perps dexes, these are basically casinos, and they make a ton of money as long as they're not poorly managed. EdgeX looks as though it is well run. But notice token holder net income. I thought that EdgeX was going to run some type of I thought that they were going to drop a token at some point. Maybe not. But the DEX itself makes a ton of money, man. So that's probably a good thing. It means that, they're likely to continue developing new products
mhm.
and, potentially, new innovative products. So it looks to me like it's just another perps DEX, but looks like they've got perps, spot, prediction markets over here. Maybe so XP. Okay, so you see this? Whenever you see something like this, XP for points or like a pre-TGE season, anything like
Those
this
that
tells
don't
you.
know, TG is token generation event.
Right. Yep. So that's what I was looking for. That's why I started off over here on DeFi Llama, taking a look at the income statement for EdgeX, because I wanted to see, okay, do these guys make money, number one? And then number two, did they drop their token yet? And if they did, what does the token holder net income look like? And so zeros across the board so far, but it looks like that is simply because they haven't dropped the token yet. So,
I'd
this
be
is.
interested to see what their potential tokenomics on their token is going to be, because that's going to dictate, if some of that revenue that they're, generating, those fees that they're generating, is going to somehow flow to token holders.
Yeah, no kidding. And so to learn about that, we hop into the documents section here. So once we're in the docs section, the white paper would probably be pretty good to read. In fact, this is great. I'm going to download a copy of this because most of these perps dexes, they don't actually give you, their white paper.
Mhm.
And so I need a copy of that because I
You
want to
can feed
build
it
my
into
own.
the AI, and you can actually build a course on it.
Yeah, well, not just that, I could build my own perp stacks around their white paper. So that's pretty cool. Um,
Oh,
but
oh
if
yeah,
we,
for the Node.pro.
yeah, so if we take a look here, I'm looking for tokenomics on the TGE. So let's just take a look, vision and roadmap. So all I want to know here, and yeah, they've got an API, so that's good. Trading, don't see anything about tokens yet. Community Edge, is that the token?
Yeah,
There it is.
probably.
There it is, the Edge token. So the total supply is 1 billion 1 billion tokens. Early users get 30%, 25% to the Genesis distribution, and 5% to the TGE, the pre-TGE season. So, okay, that looks fine. This is like standard boilerplate for a token like this. Pre-TGE will
Are
be
you paying
unlocked.
attention, Jeff? There might be an airdrop on this.
Well, yeah, but you got to farm it. And in
No,
order to farm
that's
it,
why I'm telling Jeff, he's in the chat. He's our airdrop guy.
yeah. So, I mean, the way that I would farm something like this is I would go on over here to Loris. That's the way that I would farm like a TGE on a perp stacks. I would hop on over here to Loris, and then I would look for really positive funding rate spreads. Let me go ahead and deselect all, and we want to look only at basically we're only looking for like edge X, which is going to be here somewhere. I know it's on this list somewhere. There it is, edge X. And then maybe we also want to take a look at something like Aster or
Hyper
as
liquid.
so I'm assuming that EdgeX is EVM chain. Is EdgeX EVM chain, Mike? If I hop back on over here to EdgeX, click on perps and connect wallet. Okay, yeah, it's EVM. So the way I know that it's EVM is the type of wallets that it's asking me to connect with. So if
Yeah.
it's asking me to connect with Rabby or MetaMask,
Hmm.
more than likely this is EVM. So
Huh.
that's good to know. So now we're back on over here at Loris. I've got EdgeX selected. Maybe I want to take a look at something like Lighter. I know that they've got some rewards. Pacifica used to, but I think Pacifica might be on Solana. I'm going to deselect Pacifica. Let's see, variational. Are they Sol or not? Not quite sure. Hyperliquid maybe. And I would love to be able to trade on Ethereal because you get some really nice perks trading there. Okay, so I've got 1, 2, 3, 4, 5, 6 perps dexes selected. And what I'm looking for is I want a star edge X. And then all I want is like a really positive ARB. And it looks like across these dexes, you're not going to get it. So you'd basically just be breaking even on a
Hmm.
funding rate ARB with the goal of farming the edge token generation event. That
Gotcha.
would be the goal here. So no juicy ARBs between EdgeX and these other handful of perps dexes. And so what you'd be
I'd be
doing,
interested to see if that's the only way that you can earn XP, towards the potential airdrop, or if there's other things like what Jeff usually does is a lot of times they have basically people beta testing, like new functionalities and things like that, and to help them work the bugs out, of some of their different apps or dApps or whatever that they're doing. And I'm just curious. Who knows?
yeah, I mean, potentially there are other ways to earn those tokens, but usually they want you to like earn XP, and after you earn
Yeah.
XP, then that translates into tokens once they drop the token. So
So
yeah,
Jeff's asking you maybe some scalp trades to gain XP.
I mean maybe, but I would rather be just farming the funding rate, and it doesn't look like there's a whole lot to be had there. So I'd probably
Yeah, you were
pass.
thinking of like doing some arbitrage between the different.
Yeah,
So
I would have
basically make money to farm for an airdrop to hopefully make money.
exactly. Yep,
Yeah,
that's the idea.
awesome. All right, moving right along. Ooh, sorry. All right. So it looks like reporting from the block. It says that Ledger researchers expose Android flaw, enabling wallet seed theft.
That's
Have you?
bad.
Yeah. Have you heard of this? Have you seen this? Have
I
you heard about
mean, so no, I haven't. But dude, Ledger's closed source. Like the 5% of their code that matters is
this?
the closed source part. And that's why we have all these problems with Ledger. They instituted that Ledger Recover program, which is
Yeah.
basically just a backdoor to be able to extract your keys.
Yeah.
And now they're saying, hey, we found some Android flaws, allows seed theft. So we've
I
got to drill down on this. What exactly does that mean?
so let's go to the actual. Let's see. Let's pull it
Because
up.
if it's because can you create a hot wallet on a Ledger on the Ledger mobile app? I don't think so. So that must mean that, like, if you've got your hardware wallet connected to, okay, let's read this. What does it say?
Yeah. It says Ledger's Don John team identified a critical flaw in MediaTek's secure boot chain that could potentially enable the extraction of a device's pins and wallet seed phrases in about 45 seconds. In a proof of concept test, the exploit recovered sensitive wallet data from apps including Trust Wallet, Kraken Wallet, and Phantom. Ledger's internal security team has identified a vulnerability in the firmware of Android phones using MediaTek processors that could enable an attacker to extract, what we just talked about. According to a statement shared with the block, an attacker with physical access to a phone can connect to it via USB before the operating system loads, extract the cryptographic keys protecting Android's full disk encryption, and then decrypt the storage offline. The
Hmm.
vulnerability, so it looks like there needs to be a like a physical aspect to it to where they have to actually connect to it physically. The vulnerability could potentially affect an estimated 25% of Android phones, the researchers said, including models from manufacturers that use MediaTek chips and Trustonic trusted execution environment. This research proves that what we've long warned. Smartphones were never designed to be vaults. Ledger Chief Technology Officer Charles Gauntlett said in a statement. While this can be patched, we encourage all users to update with the latest security fixes provided by MediaTek and phone manufacturers. It shows the challenge of storing secrets on non-secure devices. If your crypto sits on a phone, it's only as safe as the weakest link in that phone's.
Okay, so I'm still a little bit unclear, Mike, as to exactly what it is that they're saying here, because they mentioned trust and phantom at the top of the article, but
Yeah,
the block framed it as if it was an exploit for Ledger. But it looks like Ledger's own white hat hackers discovered an exploit on specific handsets that you have in-person access to, and where you can essentially extract keys from
yes,
those hot wallets. So did you notice the way that it was framed though? The way that
yes,
it was framed on on X by the block, that post, it
yes,
made it look almost like there was some exploit on Ledger devices. So Ledger researchers expose Android flaw enabling wallet seed theft. So maybe it isn't. Maybe I was just misreading that. But it's definitely for hot wallets and not for a Ledger hardware device.
yes.
Well, that's good.
I personally stopped using my ledger. I started using Arculus and some other ones just because of, like you said, the closed source aspect of it, and it just doesn't. It always seems like there's something up going on with Ledger. Just I'm not a fan.
Yeah, me
So
neither.
Bankless, this is a great account to follow. They have some really good content. Why ETH might be near a major turning point. Ethereum underperformed this cycle, and investors are asking the big question: did ETH just skip a cycle, or is something deeper going on? It looks like they had their little thing. They sit down the market cycle. They also unpack why ETH struggled despite improving fundamentals. Mike explains how Ethereum's layer 2 roadmap may have improved the network while weakening short term value capture for the asset itself, and what signals he's watching as he looks for the next expansion phase. So I know that you are very, very knowledgeable
Yeah.
about ETH. So what is your thoughts on all
So
that?
so here, Mike, can you go back to that article real quick? I want to just be able to touch on a couple of points from that last piece of content there, because so what I can see here is I'm looking for that last Bankless article. That's the one.
Let's hold
Let
on.
let me see, because here's the thing. Um, Everyone is just kind of guessing. That last part where he mentioned value capture, that the layer twos may have improved the network while weakening short-term value capture of the asset itself. You've really got to ask yourself, why should ETH number go up? Why? Why
Yeah.
should the number go up? Why should Sol number go up?
Mhm.
I think that no one has been able to accurately predict this. And so using MVRV, supply and profit, or a 200-week moving average, this is like the best tool set that we've got, when really, I think it comes down to user adoption. I think that that's what matters.
Mhm.
And if there aren't, massively more users, on Ethereum and its layer twos, then I think that simply means number can't go up. Because as a business, does Ethereum, like the chain, make a ton of money? And how does it return that value to ETH holders? You basically got to stake it, right? There are burns, but my thing with ETH is that you need more user growth. That's, I think, what we need. We
Mhm.
need more users on chain. Same thing with Bitcoin. We need more users on chain. And you get that next billion users on chain, And I think all of a sudden you'll see, maybe ETH at $10,000 and Bitcoin at a couple $100,000.
Mm.
But we need those users first. And
Absolutely.
that's part of the reason why I'm bullish on regulatory, real regulatory clarity, because I think that would be like a backdoor, like a way to bootstrap more users.
Well, it's gonna give, not just institutions but retail more confidence, in investing in these assets, because most people, especially with the way the economy is and inflation and everything else, they're very risk off. They're very very risk adverse right now,
Mm.
with everything going on in the macro. So I think you're right, and with any technology, it all comes down to adoption. Cell phones, computers, laptops, all that is, in any business for the most part, it's all about, demand, supply and demand. So if you have Bitcoin where there can only ever be 21 million, and, the more demand there is for it, the price goes up. The less demand, price goes down. So, it's that's kind of the long and the short of it. But well,
Yeah,
that wraps
yeah,
up.
and
Oh, good. Sorry.
yeah. So Vitalik, man, uh, I really like that we don't know the identity of Satoshi. I like
Mm.
that.
Yeah.
I think that's a net positive for Bitcoin. So yeah, Vitalik is he's a funny guy, man. You gotta love it when he comes out there with that picture of his girlfriend or whatever. That was
Oh,
hilarious, dude.
oh, that great gray sweatpants, man.
Oh
Dude,
my god,
dude's
bro.
packing, man. He's packing some heat.
That was hilarious, man.
So,
But
well, that wraps up our news segment. What do you got for us as far as education today?
we're gonna get educated. All right, check this out. So I've been working diligently over here in school, producing some content on OpenClaw. So, Mike, you want to learn a little bit about OpenClaw?
I do. If
Yeah,
for whatever
yeah.
reason your screen will come up.
Oh, I think maybe I just didn't add it to the thing. Oh no, it says add to stage, and
Unshare and reshare.
gotcha. Okay, let me stop that share, and let's go ahead and let's learn about OpenClaw. And I think this should be working now if I add it to the stage, and it's not. It's not. So here, let me stop it one more time, and I'm just going to try this from a different tab, and we're going to
Well, while
hop on
you're
over.
doing that, I will, this last piece of news. There is a warning. A fake tool is doing the rounds that looks identical to the official OpenClaw software. Real docs, normal files, nothing suspicious. But the second you install it, it silently steals your seed phrases, wallet keys, and passwords. You won't even know it happened. So be really careful when using OpenClaw, because if you don't know, the way that it works is you give it root access to whatever computer that you install it on. So make sure that you do it on a device, like your laptop, like an extra laptop, that you don't have any of your hot wallets on, that you don't do any of your trading on, you don't do any of your banking on. It just a dedicated fresh install of the operating system. Make sure you use it on that, because again, you're giving it root access to everything on your computer. It can do anything it wants at that point. So, David, go ahead.
Oh yeah, so OpenClaw is really kind of like the holy grail for AI agents, um, because if you can give your AI agents hands, so to speak, such that they can do things in real life, or do things for you using your tools that you already use to, do your work every day, well, then they become, in a sense, employees, right? If they're actually doing real work for you and you're spending tokens to maintain these agents, then these are essentially employees. So, what I built here is this is a really, really basic
I'm, I'm,
system.
I'm excited for this.
Yeah, so this one is really, really basic. So this one is you've got an orchestrator agent. I named him Bob in accounting. And Bob in accounting has a couple of sub agents that do specific tasks for him. Now that I've learned quite a bit more about OpenClaw just over the last couple of days, I do not believe that this is the best way to, if you really, really want to get some complex tasks done, I don't think this is the best way to do it because of the types of the way that the memory works for the subagents. So, but we just need to learn a little bit here about the architecture first, and then we can get into the minutia later. So let's go ahead and play this audio content, or excuse me, this video content. This will be really interesting. This is basically like introducing everyone to the
welcome
AI
to the Explainer.
office.
Okay, I want you to picture something. Imagine an office where every single employee, from the COO all the way down to the specialist analyst, is an AI, a totally digital workforce running a business around the clock. Well, today, we're going to tear down the walls and look at the actual blueprint for a system just like that. So who's running this digital office? Well, meet Bob. And as you can see, he's not just some faceless algorithm. He's got a whole persona. Think of him as the slightly stressed, by-the-books manager who's at the very heart of this whole thing. This brings up a massive question, doesn't it? And look, this isn't science fiction anymore. We're looking at a real, tangible model for a fully automated business. And in this explainer, we're going to dive into exactly how it works, who the key players are, and, maybe most importantly, what keeps it all from going off the rails. So here's our game plan. First, we're going to properly meet Bob, the AI in the corner office. Then we'll get introduced to his specialist team. After that, we'll see how they all work together on this kind of digital assembly line and walk through a typical automated day. And finally, we'll check out the security that holds it all together and ask the big question: what does this mean for the future of work? All right, first things first. Let's get properly acquainted with Bob. He's not just another agent in the system. He's the orchestrator, the central hub that makes this entire operation tick. So what does it actually mean to be an orchestrator? Well, think of Bob as the chief operating officer. He's not really doing the grunt work himself. Nope. His main job is to direct traffic, pull all the information together, and make sure everybody is doing what they're supposed to, when they're supposed to, and
Right. So Bob is the orchestrator agent in this setup. So I think that the better way to do this would be you've got the main agent, and then each sub agent, if you spin them up, only does something directly related to what that main agent's task is. So this example here, I've got the COO orchestrator Bob, and he manages a handful of sub agents who are essentially like his employees. You could think of them as employees, and they go out and they have keys and skills, and they do things for you using your tools in real life. And then Bob orchestrates all of that, and then you control it on your cell phone over Telegram. So that's what I've set up so far. But I don't think that it's the best way to set it up. And I can actually share what it looks like with you guys over here on, just over here in Cursor in a second after we get through this video content.
and doing it safely. And this slide, it pretty much spells out his entire day. A request for market analysis comes in, bam, he knows to send it straight to the trading agent. A bigger, high-level strategic question comes up, he handles that one himself. And at the end of the day, he's the one who bundles it all up into a nice, neat report. Oh, and critically, he acts as the gatekeeper, verifying identity on every single interaction. Of course, Bob isn't a one-man show. He manages a small but very specialized team of other AI agents. Each one has its own specific role and, yeah, even its own personality. So let's go meet the workforce. First up, we have Trent. Trent is the numbers guy. His entire persona is built around being this razor-sharp quant analyst. You get no fluff from Trent, no small talk, just pure, unadulterated, actionable data. So let's look at what Trent actually does. He is constantly scanning the crypto markets, looking for any kind of volatility or opportunity, and he communicates everything in probabilities. Now pay close attention to that last bullet point. Writes to o1marketdata.md. This is absolutely key.
Yeah, so this is really important. So when you spin up these sub agents underneath your main orchestrator agent, they write data to these MD files. And the MD file is kind of like not quite memory, but it's like the output. And so these outputs are then going to be used by other sub agents down the assembly line. So
Mhm.
start with Trent, and he's talking about market stuff. And then
Mhm.
that gets fed to Claire, and she's creating posts for social media. And
Mhm.
then you've got Ada, and she's managing the administration. Well, what in the world does what Trent put in the market data file have to do with what Ada is looking at in admin when it comes to finance? They don't really have anything to do with each other. So I think that that would create an opportunity for the AI, for the models to start hallucinating and making shit up. So
Well, you have said that the less you say, the better it is at not hallucinating. And so, I could see, creating a more efficient workflow to where there's it's the each of the AIs are only getting the information that they need to do their job and nothing more.
yeah, so basically, when it comes to OpenClaw, what you want to do is you need to really understand the architecture of it,
Mhm.
and you need to make. There's only like a handful of files. There's like 6 files. It's like soul.md, user.md, a handful of others, 4 others. Those files, those are what you need to focus on because that creates your persona. So your persona is that main agent. So the persona that I created at first was Bob in accounting. He was the main agent, the main persona. And then these sub agents that I spun up, Trent on the trading desk, Claire in social, Ada in administration, they are the sub agents. But the sub agents, they don't get all of those 6 files, which means they don't have memory, not really. So you don't really want to use them for disparate tasks, I don't think. And I'll show you guys what this looks like in a second.
All right.
We can take a look at the live running OpenClaw right now.
Trent's final output is a specific file, and that file becomes the very first link in our digital assembly line. Okay, next up is Claire from Creative. If Trent is the data brain of the operation, Claire is the voice. Her whole persona is that of a super sharp content strategist who just gets the fast-paced world of social media and knows how to make people stop scrolling. And here's where it gets really cool, the connection. See that? Claire reads from Trent's market data file. She takes his pure quantitative analysis and spins it into gold, engaging stuff like tweets and stream titles. Her final output then goes into her own dedicated file, 02_content_draft.md. And rounding out this little AI team is Ada from admin. Her personality is exactly what you would want from an administrator. Totally meticulous, super organized, and obsessed with tracking every single detail. In Ada's world, if it isn't tracked, it basically didn't happen. Ada's job is to keep a digital eye on the overall health of the business. She's monitoring all the revenue streams, tracking the key performance indicators, or KPIs, and she puts it all together in a weekly report. She is the financial watchdog for this whole AI office. So we've met the team, but how do they actually work together? I mean, they don't have Slack channels or morning stand-up meetings. Instead, they have this shared digital workspace that functions just like a super efficient, completely automated assembly line. And this right here illustrates the flow perfectly. It all kicks off with Trent's raw market data. Claire then picks that up and creates her content drafts. Then Bob, the manager, steps in to review and give the final stamp of approval on the copy. At the same time, Ada is off doing her thing, compiling her weekly report. And finally, Bob pulls everything together from all the agents into one consolidated list of action items. It's just a clean, sequential, and totally automated process. So what does a typical day even look like in this AI office? Well, you can forget the 9 to 5 grind. This is more of a precision-timed 24/7 operation that runs on automated schedules. This schedule
So, okay, this is a super basic setup. They're called cron jobs.
Yeah.
So cron, it just stands for time, right? The what is that? The Greek god Chronos. Um, but what we do here is each one of these agents has specific tasks or jobs that it must do at specific times throughout the day. So this is a really, really simple way of setting this one up. It can become much, much more complicated than this. And so you could imagine if you've got, 15 different agents all working for you in different divisions within your company, they're going to have jobs and deliverables throughout the day, every single day. And many of them might be waiting on a deliverable from another in order to be able to complete their work. So you're really building employees, and this
Well,
is
I
how
mean,
they deliver
it's how it
work.
works with actual human employees.
Right,
Freaking, often you're waiting for somebody else to do their job so you can do your job.
right,
That's why
exactly.
they have project managers and things like that. Is they're the conductor. To make sure that okay, you're getting what you need to get done, so you can get that to this person over here, and they can do their part. And
That's exactly right.
Schedule
yeah.
is really the heartbeat of the whole system. At 7 a.m. sharp, Claire generates the content plan for the week. By 8:30, Trent has delivered the morning market briefing. On Friday at 5 p.m., Ada drops the weekly KPI report. And check this out. Long after any human office would have closed, at 10 p.m., Trent is running an overnight scan for new opportunities. It all happens like absolute clockwork. Now, this all sounds incredibly powerful, right? But it also brings up a really critical question. How do you keep it all safe? I mean, how do you make sure these AI agents don't just go completely off the rails? Well, it turns out the entire system is built on a foundation of really strict security rules. First off, the circle of trust here is incredibly small. There are only 4 registered agents in the entire system. That's
Isn't Circle of Trust from Meet the Fockers? Is that what that's from?
Yeah, the circle of trust. Yes.
Are you inside the circle or outside the
It's like
circle?
Walker, are you in the circle or are you outside the circle?
Right.
it. One orchestrator, Bob, and his 3 specialists. Nobody else is getting in. And this right here is the absolute core of the security model. Bob, as the main agent, has full access to everything.
Okay, so this is really, really important. Bob is going to have, because Bob in accounting is the main agent, so he's going to have read and write access. But these other agents, you want to limit. These are the sub agents. You want to limit their permissions as much as possible, and they need to be sandboxed. So what I've done here is I sandbox this in Docker. I just created some Docker containers through this little OpenClaw setup that I built into a Docker container, and I'm running it from Telegram. And the last thing that I'll need to really get it running is just API keys. Once I've got API keys and everything's all secure, then this can go and run. But the most important thing here is you've got to think about what type of access do you want to give these agents, because when you give them a key, they can work as if a human were working. So that means that if you give them the keys to, let's say, your email or your cloud storage, and you give them write access, well, then they could delete all of your stuff.
Yeah.
Like, you got to be careful.
But his team, Trent, Claire, and Ada, they all operate inside a sandbox. What that means is they only have read-only access to the shared workspace. They can read the files they need, and they can write to their own designated output file, but they can't touch or modify anything else. It basically prevents one agent from accidentally or intentionally messing up another's work. On top of that, there are a bunch of other layers of protection. Every single command is verified against the human owner's user ID. The agents have absolutely no access to a web browser, which is huge. It prevents them from being influenced by random stuff they find online. And they are hard-coded to just reject any external links as commands. These aren't just suggestions. They are the fundamental rules of the office.
Right. So this is really important because, Mike, what you were talking about at the beginning of this video about like fake OpenClaw, you got to be careful. So number one, I don't have any like hot wallets or anything like that. So there's no keys to steal in the first place. But number two, I sandbox everything. And then number three, I'm not actually giving this thing any permissions to, use a browser or to, click on links or to take a look at any email. And those are the attack vectors. So that's how you get prompt injection attacks through URLs, through web browser access, through email. And I'm not giving it any of that access. I'm focusing this agent system on a specific set of tasks, and that is it.
Mhm.
So, yep, that helps to keep it secure.
So now that we've seen how all these pieces fit together, the manager, the team, the workflow, the security, what does it all mean? Let's zoom out for a second and look at the bigger picture. And really, the key takeaway is this. What we just walked through isn't some theoretical concept or a movie plot. It's a detailed, working architectural blueprint. This is a real model for how a team of specialized AIs can work together to run actual business operations. From market analysis to content creation to financial reporting, all without a human needing to step in for every little task.
Right.
And that leaves us with one final, pretty thought-provoking question. We've seen how this system runs a very specific online business, but the underlying structure, it's incredibly flexible. It really makes you wonder, what tedious, complex, or even creative processes in your own life or your own work could be run by a digital team just like Bob's? What could it run for you?
Right? How cool is that?
Mhm.
So this is OpenClaw, and now that we've learned a little bit about OpenClaw, let me see, Mike. I want to see if I can go ahead and share a different screen here. I want to share this window. I want to hop in here to Cursor. And within Cursor, I just want to show everyone what this looks like in practice. So this is the OpenClaw instance that I spun up yesterday. And so I've got this running right now. And notice here, you see the agents, I've got 6 of them.
Yeah.
So I've actually got something a little bit more complicated than what I showed in that video content. So I've got the main agent. This is Bob in accounting. We've got administration. We've got analytics. We've got, a content social, basically like a marketing manager. And then the media ops is the guy who actually chops up content. And then we've got a trading desk here too. Now, I'm definitely going to be changing this completely after learning more about subagents and about the architecture of OpenClaw last night from one of the developers or one of the like core contributors to the code base. The way that he was talking through the architecture made me realize that this likely wouldn't work or it would quickly break. So let's just take a look over here at my Telegram. Let me go ahead and share that screen too. You know what? I might actually be able to share it from the browser. No? telegram.org, I believe. I should be able to just share from the browser. And that would be pretty cool because that way, so what is it? web.telegram.org, telegram.org. If not, I'll have to just share my Telegram screen here. Okay, so I'll just share the Telegram screen. I want you guys to see what it looks like. So you can see the 6 agents running right there on this instance that I've got running on Docker. So it's all sandboxed into a container in Docker. And what I want to show is how we can actually prompt this thing and ask it questions and what it can do.
Need to
So let's
reshare.
yep. So I'm going to go ahead and share Telegram. So here's Telegram, and I'm in the OpenClaw bot. And let's go ahead and say, hey, Bob, what's the next step for implementation? And Bob is going to think for a second, and then he's going to get back to us. And he says, check it out. The immediate next step, the
Uh,
great bottleneck.
need to reshare. It like glitched
Oh,
on you.
oh, it glitched on me. Yeah, that happens when I share something that is not a. Let me just share that window again, and then let's add that to the stage. Okay, so hopefully this doesn't glitch out. But basically, all I did here was I asked Bob a question. I said, "Hey, Bob, what are the next steps for us to get this implemented?" And so Bob is now giving me implementation roadmap, and all I've got to do is provision the keys for Trent, Claire, and Ada. I've got to make sure that I deliver the keys properly, and then we can run this first run sync for initial data pulls. Trent is going to populate his 01 market data file. Claire is going to populate her content draft file. Ada is going to sync the last 24 hours of Stripe and bank transactions. And so basically, you see, it can see my schedule too. You see that, man? We have about 90 minutes before you go live for the portfolio clinic. So that's actually what I'm about to do,
Yeah.
So like, it's literally, once I get this all up and running, it will be it will be having a team of employees managing both of my businesses for me. And then all I've got to do is focus on creating the best content I possibly can. So yeah, man, this is
that's the great thing is, I mean, it's going to help all of us on the team, like with the social media stuff. If all I have to do is just kind of, go in and check and just make sure that, the content that it's posting is accurate and, that, true, then that helps me quite a bit and frees me up to do, other tasks. If we have somebody that's, keeping track of all of our expenses, and at some point, if we give it access to a specific wallet where we deposit funds, USDC, USDT, and it can automatically pay our deliverables, our freaking our due outs of to the streaming softwares and all that different stuff. And if it just does that all automatically, so we can just focus on coming up with content for the show. And dude, it's gonna be fucking amazing.
Yeah, no kidding, man. And so, but that was like a super basic instance. Imagine if instead of doing something really super basic, what you do with OpenClaw is you use it to build an 11 agent swarm that can trade on Polymarket for you.
Mm-hmm.
Like imagine that, right? So you want to go through and leer a little bit about some Polymarket OpenClaws? This is pretty cool, man. This is some really, really cool stuff. So this is a Polymarket algorithmic trading swarm built using OpenClaw, and this could work. It could work, but the problem with this, or maybe not a problem, but definitely something to think about, is right here. So to really make this work, you would have some expenses. So, if you're running this on Google Cloud infrastructure in Europe, which is where I would run this because I want to be as close as possible to those Polymarket servers, you'd be looking at between $1,000 and $2,000 a month just to run it. But that would be totally worth it if you're generating a hell of a lot more than $2,000 a month in profit. So let's play through the video content here, and we can learn about how to apply that OpenClaw framework to creating something much, much more complex than just a couple of bots managing a social media pipeline.
Have you ever seriously thought about what it would take to build an AI that actually makes money for you? I mean, 24/7 while you're sleeping at a speed no human could ever touch. Well, today, we're going to stop wondering. We're going to tear down the actual implementation plan for one of these things. So, what does it really take? We're not talking about some simple little script here. We're talking about a full on autonomous swarm of AI agents, all working together, making decisions in a super high stakes, real time environment. All right, let's get right into it because we've got the actual blueprint. We're going to walk through the whole thing from the physical servers all the way down to the AI's virtual soul. Okay, first things first, let's get our heads around what we're actually talking about here. What exactly is an AI trading swarm? So, you got to think of it like a special ops team, right? You've got 11 different AI agents, and each one has a very specific job. They all work together to trade on these crypto prediction markets, which are just platforms where you're betting on real world events. And the whole thing operates at insane speeds.
Okay, to make this actually work, I don't think that you could have one agent overseeing 11 sub agents. Now, potentially that could work. I'm just a little bit dubious of whether it would actually work because of something called context window. So I don't think that the sub agents would work. I think you would need to have like dedicated OpenClaw agents for each and every type of arbitrage strategy that you want to scan for and run on Polymarket. And there are a lot of them.
All commanded by one master AI called the orchestrator. So, where do you even start building something like this? Well, believe it or not, before you write a single line of AI code, you have to build its body, the physical and digital home where this thing is going to live. And that story, it starts in London. And this is where it gets really cool. The whole system is structured kind of like a person. You've got the controller, that's like the brainstem, running the basic agent software. Then you've got the muscle, which is this beast of a GPU that lets the AI think in under 50 milliseconds. And finally, there's the face, a proxy server that handles how the swarm actually looks to the outside world. And here's something you might not even think about, but it's absolutely critical. This isn't just a tech problem. The entire operation is set up in Europe on purpose. Why? To get around the platform's terms of service and geo blocking. So, step one, before anything else, is making sure you're playing by the rules. Okay, so the body is built. Now it's time to give it a mind. This is where we give that spark of life, programming each individual AI agent and telling it exactly what its job is. And you gotta understand, this isn't just one big AI. No, it's that special ops team we talked about. The orchestrator is the commander, calling the shots on money and risk. The data sentinels? The scouts, watching the market 24/7. The market quoters are your frontline soldiers, placing and canceling thousands of orders at blinding speed. And of course, the risk managers. They're the bodyguards, always making sure the team's back is covered.
Okay, so here's the big problem with this. You could use agents as each of these, but the agents themselves, they need all of the logic for the strategy that you're scanning for. And so that's why I think you probably could not use sub agents for any of these tasks. I think that these tasks would need to be all their own dedicated agent, but not positive about that. That's just my thought now that I've learned more about the architecture of OpenClaw.
And get this, we're taking a peek right inside an agent's mind here. This is from its core programming file. It's not some vague goal like make money. It's a set of hard, cold mathematical rules. Optimize this exact formula. Your speed target is under 200 milliseconds. And here's one critical mistake you can never ever make. So the agents have their brains, they have their orders, but a brilliant mind is useless if it's stuck in slow motion. It needs a way to act on its decisions at a speed we can't even really wrap our heads around. This thing isn't clicking buttons in a web browser. That's way, way too slow. To hit those insane sub 200 millisecond targets, the whole execution engine had to be custom built from scratch in Rust, which is a language known for just raw, screaming fast performance. So, how do you teach an AI to use these crazy fast custom tools? It's actually pretty brilliant and kind of simple. A developer codes a new skill, like placing an order. Then they just write a simple.
And so those skills can be just about anything. In fact, if we just pause that for a second and I hop on over here let me just change the screen share. I just want to share with you guys what that looks like in practice, the actual skills themselves. So let me go ahead and make sure that this gets brought to the stage. So here is Cursor. And so I'm just running this from within Cursor. This is the OpenClaw dashboard. And if I'm in the main agent, you see where it says here, Mike, you see it says skills. So now I can scroll down and just take a look, all of these different skills, 57 of them. And I can custom code my own skills if I want to, or I can use these skills. So let's say that, I need access to a 1Password or Apple Notes, or maybe I need access to, Blue Bubbles to send iMessage stuff, or maybe I need access to ClawHub, or there's a coding agent, maybe, delegate tasks to Claude Code. That would be pretty cool, right? Because then that would mean that you could give your agents the capacity to build the software that they need to get your work done for you, which is really, really powerful. So there's the coding agent, or maybe you want to be able to talk to your agents from within Discord, or maybe you want Gemini skills, or you want it to post stuff to GitHub for you. Or maybe you want it to integrate with Google, Gmail, Calendar, your Drive, your contacts, Sheets, Docs, everything. There's that skill right there. We go down this list. How about weather, or dialing into X, the X API, or making phone calls, voice calls. Imagine all of those scam email or scam phone calls that you get. I get a lot of them all the time, and it seems they're becoming more
For the past like year or two, I keep getting these freaking calls, automated calls about my taxes, my tax issue that I don't have, and it's annoying as shit.
I get them, and they say, you've been approved for a $69,000 loan. We just need your blood type and your social and
Your mother's maiden name,
and
your birth
all that.
date, your
Yeah,
social
exactly.
security number, and
Exactly, man.
yeah.
So like here's Trello. So like that Trello board, Mike, that you shared, we could just use Bob in accounting to basically do all the work for us on that Trello board. That's pretty cool.
Well, I actually, I mean, totally off topic, but I found one that I invited you all to in the Google Drive, and that's free, so we don't got to pay for it. And I figured since it's on Google, that it would work well with a lot of the cloud services and stuff that you're doing.
Much better, much better. Yeah, I'm not a fan of Atlassian. That's the company that owns that. So let's bring it on back here to the video content, and let's continue playing this here. This will be great.
Simple text file, basically an instruction manual for the AI. The agent reads that manual, and boom, it instantly knows how to use its new superpower. All right, now for the fun part, the cloak and dagger stuff. When you're operating at this speed and scale, you tend to get noticed. So a huge part of this whole system is just about staying hidden, playing this constant cat and mouse game. The swarm basically has two different disguises. For getting stable data feeds, it uses a trusted, normal IP address from a regular internet provider, nothing fancy. But for the actual trading, it uses a massive pool of IP addresses from real people's home internet connections, so it's constantly changing its appearance to avoid getting caught and blocked. So what happens when it does get blocked? The system is designed for this. The second a trade fails, it knows. Boom, it instantly pauses everything, rotates to a brand new IP address, and gets right back to trading, sometimes in just a few milliseconds. The human gets an alert, but the swarm has already fixed the problem itself. So you've built the body, you've programmed the mind, and you've designed the stealth systems. Now comes the really nerve-wracking moment, flipping the switch and letting this thing loose in the real world, with real money on the line. You don't just unleash something this powerful and cross your fingers. No way. The deployment is done with military precision. It starts with just paper trading, a full simulation, no real money. After that, it gets a tiny bit of capital, just $500, to prove it works in one market. And only after it passes that test does it get unleashed with the full capital. And let me tell you, running a sophisticated beast like this is not cheap. Just to keep the lights on for the servers, the big GPU, all those proxy services, and the AI models, you're looking at a monthly cost of somewhere between $1,000 and $2,000. And this is so important to remember. Even though this system is autonomous, it is not unsupervised. There are strict guardrails. If the portfolio ever drops by just 5%, a circuit breaker trips and automatically shuts down all trading. The orchestrator is constantly sending alerts about anything important, and every single morning at 6 a.m. sharp, it sends a performance report to its human boss. Which brings us to the big final question. When you've got a system making decisions in milliseconds, a system that can heal itself when it gets blocked, and a system that's operating within rules set by a human, but executed with perfect autonomous precision, who's really in control? Definitely something to think about.
Yeah, wow. So I think it's definitely possible to apply this OpenClaw agentic framework to very complex tasks. All I'm going to do is start by applying it to the node and DeFi. I'm going to use it to manage both, and I think that'll be a really good starting point. So go from there, you know? Now, Mike, with what's going on in the Middle East right now,
Yeah.
I thought that it was really interesting. I saw a chart of CPI inflation from the 1970s to early 1980s, and then a chart of the inflation under the Biden regime, thrown over top of it. And they look very similar, man.
Mhm.
Very, very similar. And another thing is that's weird about that is in the 70s, well, we got that big bout of inflation in the United States, right? Because of Iran,
Yeah.
the Islamic Republic of Iran,
Mhm.
um, founded by kidnapping Americans and murdering Americans. Like that was like the whole way that they were founded. And but we've got something very, very similar now. And so this double dip inflation is something that a lot of people have been worried about. And let's take a look at this because if that double dip inflation were to, if we get another bout of inflation as a result of, crude oil or energy prices going through the roof, or maybe it doesn't even have to be US based. Have you seen what's going on in China, Mike, with the fuel lines? Yeah. So let's see. Let's learn a little bit about this economic deja vu.
After that wild ride with post pandemic inflation, it really felt like we'd finally gotten things under control, right? The worst was over. Or was it? Well, history has this funny way of repeating itself, and some folks are starting to see an unnerving echo from a time when everyone thought the inflation fight was won, right before it came roaring back with a vengeance. Okay, so let's just dive right into it. The big question we're all wrestling with is whether our recent victory was the end of the story or maybe just the end of round one. And to really get a handle on what might be coming our way, we've got to look back at the last time America faced a challenge that looked surprisingly similar. The key idea here, the thing we're really digging into, is something called double dip inflation. And no, it's not a straight line down. It's more like a painful economic roller coaster, where this feeling of relief suddenly gives way to an even bigger problem. You can think of it as a kind of economic false dawn. So here's how we're going to break it down. We'll start by looking at the playbook from the 1970s. Then we'll see how that echoes in our economy today. We're going to game out a hypothetical crisis, compare the two eras side by side, and then wrap up with the really tough choices that policymakers could be facing. All right, so let's set the stage. We're going to rewind the clock to Act 1, the 1970s. And this isn't just some dry economic history lesson, it's really a cautionary tale, a story about policy missteps and geopolitical shocks that created a decade of serious economic pain. So this timeline, it lays out that classic double dip pattern perfectly. You see that first peak right there in 73, right after the oil embargo. But then, and this is the crucial part, you see this dip in 76. That was the moment of false hope because the root problems weren't fixed. That second shock in 79 sent inflation into the stratosphere, hitting a level that is just staggering to think about today. So we have to ask, why wasn't this problem solved the first time?
Because Arthur Burns was afraid to crush the economy to solve it.
Well, a huge part of the answer has to do with the thinking inside the Federal Reserve itself. The Fed chair at the time, Arthur Burns, was basically convinced that this inflation was caused by special factors, things like energy prices, that were totally beyond his control.
So you guys remember when Fed Chair Jerome Powell, during the Biden regime, was talking about inflation being quote transitory. Y'all
Yeah.
remember that word transitory?
Yeah.
Well,
Everything was transitory during that time.
transitory. Oh, don't you worry. The lockdowns, 2 weeks, control the spread,
Yeah.
all that nonsense. Well, back in the 1970s, it was special factors. So it's just literally, history may not perfectly repeat, but it sure does rhyme, man.
He thought his main tool, monetary policy, was powerless. And that led to a response that was hesitant and ultimately a total failure. And wow, this slide just perfectly illustrates that failure in action. You can see the Fed was trapped in what they called a stop go cycle. They'd hit the brakes, the stop part, by jacking up interest rates to fight inflation. But then, the second the economy started to weaken, they'd slam on the accelerator and cut rates again, the go part. This constant back and forth meant that people just started to expect high inflation, and that became dangerously baked into the system. So you've got this economy that's just primed for more inflation. And then bam, the second shock hits. The Iranian Revolution wasn't just another little price hike, it tore a massive 7% hole in the world's daily oil supply. This wasn't a ripple, it was an absolute tidal wave. A crisis like this, it needed a totally different approach. And that's when a new Fed chair, Paul Volcker, steps onto the scene. He just threw out that failed stop-go policy. His plan was brutal, but it was simple. Do whatever it takes. He stopped fiddling with interest rates and targeted the money supply itself. Let rates soar to an insane 20%, and knowingly plunged the economy into a deep, painful recession to finally break the back of inflation. And this is really the nuts and bolts of it right here. Instead of just tinkering with interest rates, which was like treating a symptom, Volcker went straight for the source, the actual amount of money flowing through the system, things we call M1 and M2. It was a complete revolution in how the Fed operated. Okay, so that was the 70s, a wild ride. Now, let's fast forward to Act 2, our time. An initial inflation spike, a period of relief, a feeling that the battle's been won. Does any of this sound just a little bit familiar?
Right?
I mean, we
Doesn't it sound like the exact same thing?
all
Yeah.
remember it, right? That post-COVID inflation peak hitting over 9%. It was a real shock to the system. But the Federal Reserve acted, and acted aggressively. And in our scenario, by early 2026, inflation has cooled way down. The whole soft landing story takes over. This idea that we beat.
Yeah, but the price inflation has not gone back to where prices haven't gone back to where they were in 2020. So yeah, an important concept to understand. So the rate of inflation was brought down from, probably a bullshit 9%, must have been higher than that because that's the official number. So if the official number was 9.1, you can bet it was 30%. So it was brought down from 30% to now, if the official number is 2.4, well, it's probably 10%. So it was brought down from 30 to 10. But that doesn't say anything about the inflation in prices themselves, because inflation is caused as money supply expands. So the value of the currency that you're using to buy goods and services is going down. So that hasn't changed. The dollar has not become more valuable. It's just that the rate at which the dollar loses value has slowed. Great. Awesome.
Inflation without wrecking the economy. But here's the thing. Just like back in the late 70s, there were these underlying vulnerabilities lurking just beneath the surface. You had sticky inflation in services that just refused to go away. Costs for housing and insurance were still sky high. The job market was incredibly tight, and government spending was creating a massive deficit. The economy was a lot more fragile than it looked on the surface. So you've got this vulnerable economy, and it's just waiting for a spark. And in our hypothetical scenario, that spark is a huge geopolitical crisis, a military conflict that shuts down one of the single most important waterways on the entire planet. And to really wrap your head around the scale of this potential crisis, just look at this number: 20 million barrels of oil every single day. We're talking about roughly 1/5 of the entire planet's oil consumption, all squeezing through one narrow little strait. And listen, it's not even just about oil. A full 20% of the world's liquefied natural gas also goes through the Strait of Hormuz. So if that gets shut down, it's not just an oil shock.
So here's the challenge. My understanding, Mike, is that this has been force majeure. Like this has been force closed. That all that production there has been essentially like shut in, regardless of whether the strait is open or not. And then the insurance just to get through the strait. So my fear here is that if we bring it on over here to just a chart, what I'm worried about is that it might just be a matter of several more weeks on the upside, and then you would see the S&P and the Nasdaq really start to correct. So if the producers in that region have been shut in and the strait is, let's say, navigable, well, that doesn't matter. It doesn't matter if the strait's navigable if all the production is stopped.
Yeah.
So that would push price straight up anyway. So, crude currently trading for $88, but it was $120 on Sunday evening.
Hmm.
So, we could definitely see crude back up there at 120. Um,
Absolutely.
yeah, so that's kind of what I'm concerned about.
It's a full blown energy crisis that would send shockwaves into every corner of the global economy. Which, of course, brings us right to the absolute core question of this whole explainer. We've got the setup for a second inflationary wave. But is this time really different? Are things truly the same as they were back in 1979? Or are there fundamental differences now that might actually protect us? Now, the biggest argument, the number one reason people say this time is different, is right here on this slide. Back in 1979, the United States was a massive energy importer, completely at the mercy of foreign producers. Today, because of the shale revolution, the US is actually a net energy exporter. That's a huge change. It's like having a powerful structural shield against an oil.
That goes back to the onshoring that we were talking about, where something that, love him or hate him, something that Trump is doing with tariffs is, trying to bring manufacturing back, onshore, he's, drill baby drill and all that is he wants the US to not have to rely on these foreign sources for the raw materials and, the energy that we need to, keep our economy going. Very, very smart. Like, again, love him or hate him, it's a smart move.
Yeah, man. I mean, he's crushing it. And those tariffs hopefully will be a useful tool to reshore manufacturing. And it seems to be already working. So, this is the big difference between the 1970s and today is that in the United States today, we do have this capacity to produce all of the energy that we require right here in America. So that is America. So that's a little
Yes.
bit of a difference, a little bit of a difference. But could the price of that crude really get pushed drastically higher? Yeah, yeah, it could. Would that lead to shortages though? No, not in America.
But, and this is a big but, that shield isn't foolproof. Just take a look at this data. Our government's fiscal deficit, for instance, is projected to be way, way bigger than it was in 79, and that's pure inflationary fuel. The labor market today is much tighter, which creates the risk of a wage price spiral. And maybe the most surprising thing of all, look at consumer sentiment. The public's mood is almost identical to the deep pessimism of the late 70s. So if our energy shield has holes and our other stats look shaky, what's our biggest defense? Well, it's something you can't really put on a chart. It's what people call the Volcker legacy. Because Paul Volcker was willing to cause so much pain to kill inflation, he gave the modern Fed something the old Fed never had: credibility. People actually believe the Fed will do what it takes. And that hard won credibility?
Do you think that Fed Chair Powell in his last 2 months is going to do anything? I don't
No.
think so. And the next Fed chair, what is it, Kevin Warsh? We need to learn more about him so that we can, start to prepare for his. He's going to be leading the Fed. He's going to be the chair of the Fed starting in May. So we should definitely. I'll put together some research on him.
All right.
Well, in our scenario, it's about to be put to the ultimate test. Because in the face of a new energy shock, policymakers today would face a monumental and very familiar dilemma. Because the choice facing them would be stark. And this slide just lays it out perfectly. Do you follow the path of Arthur Burns? Cut interest rates too soon to try and save jobs, but risk letting inflation spiral completely out of control?
Doesn't that sound like exactly what Fed Chair Powell has started doing?
Yeah.
Cutting rates potentially too soon. And now
Mhm.
we get this Iranian war and all the shut ins in the Middle East and energy prices doubling in a couple of weeks. It sounds like we're more in this scenario. I don't think the political will exists to
They
force the American people
they're
to
so pain
swallow.
adverse because politicians are always worried about getting reelected and keeping power.
Right, right.
So like nobody wants to be the one that that causes the pain that, to be quite honest, is necessary because this long drawn out pain that we're going through, it's just going to get worse and worse until the problem is fixed. And until somebody rips the Band-Aid off and allows the wound to heal, there is no fixing this. We're past the point of no return. They've printed far too much money. They've pulled the levers on the economy as much as they can to milk as much as they can out of it without causing any pain. They have no more levers to pull. I mean, we're gonna have to have a period of pain to right the ship.
Bitcoin fixes this, it sure does.
Yeah.
Or do you embrace
We've got 30 seconds left.
the path of Paul Volcker? Keep rates painfully high, risk a deep recession, but guarantee that inflation is crushed for good. And that's really what it all comes down to, leaving us with one final, incredibly tough question. To secure the economy for the long term, is there any other option? Or in a world where history seems to rhyme, are we ultimately forced to choose between repeating the mistake of 1974 or enduring the pain of 1982?
Yeah. Well, time will tell. It'll be an interesting next couple of weeks, Mike, no doubt about it.
Absolutely. Well, that's our time. We've reached 11 o'clock Pacific time. So actually, really quick, I want to make sure that we drive this point home. Let me share my screen real quick. So starting on Monday, this coming Monday, we will not be streaming to any other channels on YouTube except this one. So please, please, please go to the node. So it's at the node_channel. Find us on YouTube, follow us there. We will not be streaming to anywhere on YouTube except here. This is the official channel starting on Monday. Want to stress that. Next show is tomorrow morning. Is this show 9 a.m. Pacific, noon on the East Coast, and we will give you we'll give you the latest hot news and our takes on it. And David will have some educational information ready, and maybe we'll have some updates on some of these integrations that we're doing with the website and some of these AI tools that David's working on. So appreciate everybody in the chat. We promoted some people to mods so they can help us take care of the chat. We got Ellie Wispy and a couple of other people. Of course, Jeff. I don't know why he wasn't a mod, but we appreciate you all and the support, and appreciate the arena. We got 50 people on the arena alone tuning in, and about 150 people live across the other socials. So appreciate all the support. We're here for the long haul. We're not going anywhere. Don't care if it's a bull or a bear. We're here to stay. So again, please like, share, and follow. And until next time, Veteran Crypto out.
Peace.